today's session of automated trading, we will continue to work with the EMA and the ATR. This is the part 3 of the ongoing series. In the financial market, it's a bad day. It's kind of maniac Monday as we have substantial falls in equity valuations, and of course, not to talk of the plunge in crude oil prices. But that's another topic. Here we are focusing more on getting our trading system automated so that regardless of the circumstances, our algorithm will continue to make money. So let's get started. Today we will work with the EMA. I hope by now you are well familiar with the EMA, the exponential moving average. Then the ATR, the average true range, that is the average of the daily volatility in the prices which we see in the underlying instrument. And of course, to do the optimization and to get the execution point as per our requirement, we are adding the AC2 and to contain some risk and also to optimize the algorithm further. We will be also using the min-max. Before we get started, this is the standard disclaimer. This session is purely for the tutorial purpose and no claim is being made for the profitability or otherwise of the algorithms which we will be developing during the session. And even if you want to use any of the algorithms which we develop, I would advise that you do extensive trial runs for sufficient enough time, and then demo run on the mock run on the demo accounts as well. And this session is not to be constructed as any advice to trade or any particular setup. On that note, let's get started. We will take a brief recap of the developments we have been doing so far. Let me give you a brief idea of the trading system which we are developing. So here the underlying theme of our trade setup has been that if the EMA 10 is above EMA 20, then we will be looking for the buy trade, but only when the algorithm when the last tick price is within the 20 pips from the EMA 20. And also we are using the ATR on the daily time frame. So this is the daily time frame, and whatever the ATR we have, we are going to use the volatility there, and we have defined the requirement as 30% of the yesterday's ATR. So only if that condition is met, our algorithm will look for trading opportunities. And then to make sure that we execute the trade only when there is a initial change, there is a change, and the price action is just in the initial hours of that change. When the momentum shifts from bearish to bullish, we look for buy trade. When the momentum shifts from bullish to bearish, we look for a sell trade. So AC2 has been put in for that purpose. So here this is the setup so far. This is the standard instrument subscription, and then we have defined the position requirement to be 0 so that the trade happens only when there is no current position open or pending on the account. This is EMA, 10 EMA and 20 EMA. The ATR defined at shift 1 yesterday, that is, and the time period is of 14. Then the AC2 defined at half an hour to give us the initial execution point, and then these are historical candles using hourly time frame to define the volatility, minimum volatility that should be there in last 3 hours. And this is the historical candle, single candle, candle close, to make sure that the candle close is above or below depending on our requirement for determining whether to go long or whether to go short. These are calculations. Here we have subtracted the candle low from the candle high to get the range of the last 3 hours, and then we are going to compare it with the 30% of the ATR, and then these calculations are there for determining that the last price before the order gets executed should be within our range, that is 20 pips from the EMA. So this is the calculation for defining 20 EMA, and then these are calculations. Both these calculations are to determine that the plastic price is within the range. So here we have compared that EMA should be less, 10 EMA should be less than 20 EMA, and the volatility should be more than the 30% of the ATR. The value 2 periods back should have been greater, that is the momentum was in the bullish territory, then it just now it's turning into a bearish territory, and the candle close is less than the EMA 20, that is below EMA 20, and this is uh, the range, that is the last tick price should be within 20 pips from the 20 EMA, so that our order will be executed. So this is the setup so far, but as I will explain to you on chart that we need to do further optimization, we will need to bring in the 5 minutes condition. So suppose what happens sometimes, as you can see here, that if there is a substantial price momentum, and if that price goes on to drop substantially from the current price, and suppose if the price keeps falling, but given the given the way we have designed our setup, the order validity, that is the time frame for the order to begin to get executed, is going to be half an hour. So what happens here, that EMA is still in the buy zone, that is EMA 10 is above EMA 20, and as we have defined that elastic uh, should be within the 20 pips, and when doing the calculation, what we did, we simply calculated the EMA 10, that is we subtracted the EMA 10 from last tick price. So even if the price falls below, that condition will be still in a fulfilled mode. So because of that, our orders conditions will be there, and even if the price is falling too much because of any unforeseen reason, we our algorithm will continue to execute the trade. To avoid such circumstances, what we have to do, we have to bring in some condition on the lower side. So what we do, we define floor price, we take in some floor price, maybe around 2 or 3 hours time frame should be good enough. And suppose if we are defining at 2 hours, so what we will do, we will make sure that the last minima, the current minima should be equal to or greater than the 2 hours back minima. So that will mean that there is no unexpected plunge in the price, and our conditions are as good as they were supposed to. And what will happen, suppose if there is any plunge for unexpected reasons, even then the algorithm will not misfire, and rather it will simply stop trading. So I hope you got the point. I will explain to you on the lower time frame. So suppose if here the all the conditions which we have defined so far, if they are getting fulfilled somewhere here, then as we have defined the AC2 for half an hour, our orders will be getting executed during the next half an hour. Now we have defined the stop loss also, which is there for 15 pips, but suppose if there is a fall more than 15 pips, then the stop loss gets executed. But since the rest of the conditions are still valid, that is the EMA 10 is still above EMA 20, and again those minimum difference, and the AC2 condition which is there for the shift 1 will be still valid. So again next trade will be executed, but and again the next stop loss will be placed 15 pips below, and suppose if there is too much of an price move on the downside, again the stop loss will get triggered. To avoid such circumstances, when the price is falling too much, what we do, we bring in some lower time frame min max condition, and if the price indeed falls too much, then since we are going to put a cap on, suppose if the price is falling and the current minima goes lower than the 2 hours back minima, then we will ask the algorithm to stop trading. So just let's, so we will need to bring in that condition here to make sure that we don't lose too much of money in unforeseen circumstances. So this is at 30 means 2.5 hours. We will do it for 2 hours, so we will make it 24, and we have to utilize this at low value. I think we will need to use minima and maximum separately rather than in our calculation there we are going to use two separate blocks, and here also we will need to do add separate minimum and separate maximum, so lowest value, and this we are going to do minimum is of 24 for 5 minutes, and we are going to calculate from the custom data. Read is 5 minutes. Okay, and we are going to define at low value for last 24 candles of 5 minutes each. That will mean that 2 hours data will be there. And now let's add maxima. And here also we will use the highest value and define it at 24. We will define the custom time, calculate from the custom data. It is 5 minutes, and so far so good. So let me explain to you what that circumstances might look like. So here you can notice that there is sudden fall, and what happens here, if the given that this fall is happening within half an hour, so 60 pips fall is there, but time frame is pretty short, and in such circumstances multiple orders might get executed by our algorithm, and each of those orders will be closed with 15 pips loss. To avoid such circumstances, we define the min-max condition, and we state that it should be last minima should be equal to or greater than the 24 periods back minima, that will be 2 hours back minima, and if that condition is not fulfilled, the algorithm will stop trading. So let's do that. Now we make it back for 1 hour. And then we will do the test run. We can also add one further condition like we had done last time around, that we define the highest value for current 30 hours, then we make sure that once a new high has been defined, we allow the consolidation to happen for next 12 hours or whatever hours we deem fit, and within that consolidation phase, no trade will be executed, and once the consolidation is getting over, again the algorithm will be free to trade. That can be also done, but I think I will leave it to you as we have covered that in last session itself. Today, in today's session, we will simply focus on the risk mitigation measure, and here, as I said, we will need to define the minima and the maxima separately, as we have to define the high value and the low value. So we will need 4 blocks, one for the current and one for the 20 time period back of 5 minutes each, 20 candles back, 24 candles back. This is it. I think we will keep it lower so it will be easier for us as well to connect. Now, here first we define the minimum values, the bid, and the low price. We change the time period to 24. The shift here it will be 0, but here we will make it as shift 24. So that will mean that it will be 24 2 hours back, or I think suppose even if we do the changes like let me go back again on the chart. So see, it will be even better if we compare the current minimum value to just say 4 or 5 or even 3 candles back, 15-20 minutes back, and even say circumstances if the fall is happening or just getting started. Even in such circumstances, the algorithm will stop trading, and maybe sometimes around if we compare the current value to 2 hours back, then the 2 hours back minimum might have been pretty lower, and it won't exactly do as we wanted to do. So okay, shift our let's change this shift time frame to 4, so that will be 20 minutes back, and we connect this flow to this block. We have kept these prices and bid the lowest price, and now we will connect this to this block on the lower side. I think I am okay. I will need to change this time frame as well, 5 minutes each. So here we have changed it to 5 minutes, and now coming to the other blocks, here also we will need to change the time frame to 5 minutes. We will make it shift 4. We change this time frame to 24. 5 minutes into 24 will be 120 minutes, 2 hours. 24 So far so good. Here we will change it to ask value while calculating the maxima. We will look for the ask value, and here let's make it highest value, high price. Okay. So while determining the maxima, we will be using ask of the high price, and while determining the low minimum value, we will be using the bid of the low price. So that's it. Now we need to bring in two if blocks, one for the buy side, another for the sell side, and we will be almost done. And then we will do the test run to see what kind of trades the algorithm is executing, and if we need to do further optimization. So here we want the current minima to be equal to or greater than the minima 4 candles back, 20 minutes back, and we want the maxima, the current maxima, to be equal to or less than the maxima 4 candles back. So here we are adding those conditions. We need to add the minima conditions while making a buy trade, and we need to add a maxima condition for a sell trade just to ensure safety in volatile times. So let's add this here, and we keep everything else as it is. We connect it to less input less than the second input, and then we bring it here. We could even look for pending open, but we have already seen pending open. I hope if you feel it's desirable to open the trade with lag, then you can utilize the pending open. The maxima should be equal to or less than the maxima 4 candles back. So this is it, and the minimum value here also we are going to keep the rest of the conditions as they are. The candle close should be greater than the EMA 13. We add it, and then we connect this minima and the maxima. Minimum should be equal or greater than the minima 20 minutes back. Here the maxima should be less. So let's save this file and we will export it to the JForex platform, and there we will try to do some test runs. Let's save it, save the draft with the name March 5th, as we started working on this one on the 5th March. Okay, now we will export it to the algorithm folder. Of current month, March 5th is the name and the folder is March 20. Okay, and we then import the same file here, strategies, this PC, algorithms, and 2020 March 20. Okay, March 5th is our file, so we have successfully imported it. This is the algorithm, current algorithm Java code, and it's around 1000 lines long, and I think we might be able to do test run for a day or two, considering that we are we have to keep in mind the time constraints as well. First, before doing any test run, we have to compile the code, and let's see if the code has been compiled. Compilation has been successful, means it's machine readable now, and we now do the test run. Let's test it. We will define the time period for testing as 2 days of last week, and let's see if the algorithm executes any trade or not. Instrument is 0 USD. We leave it as it is. We keep it as the previous week, and then we will stop it midway. And here this is good. Tick the custom data account instrument account is good enough. Let's go. This is the disclaimer from the microscopy, and let me check the parameters we have placed for executing the trade so that we don't mismatch. Okay, the 15 pips is stop loss, 20 pips is the take profit, slippage is 2 pips, 0.1 million is the lot amount, and we will need to define the same here. 20 pips is the take profit, instrument is 0 USD, slippage is 2 pips, and is 1 million, the lot size, stop loss is 15 pips, and we are good to go. Let's see if our algorithm executes the trade well or not, and if unfortunately it misfires, then we will need to do further optimization and see where we went wrong. This is the equity bar. So the test run has started, but as I said, it's pretty slow. It's taking a lot of time, and because of that we might not be able to run it for sufficient amount of time, maybe a day. Even if we continue it to run for a day, even that might take a couple of minutes, and you and I might get frustrated. But from here you can notice that algorithm has been successfully compiled, and it's running smoothly on the our JForex platform. So our execution of the setup, our build has been good enough, but only thing is we need to watch out for if the trades are happening as per our requirement or not. So let's give it a minute or two, and then we will stop the test run. And coming back to today's trading session, of course, it's all sell, sell, sell. The DAX futures are down by more than 7 percentage points. So it will be interesting to see how the US markets open. US futures, the futures for Dow Jones, the Nasdaq, the S&P 500, all of those futures derivatives are trading at their limit, the 5% limit on the lower side, and it's looking like a terrible, terrible day. And the major driving factors have been the loss of lives in Italy. Now the death toll has climbed above 300, and also the ongoing price war between the Saudi Arabia and Russia, that is also going to take a toll. So friends, we will stop the test run here, as there is not much of a problem with the build of the algorithm, so it's going to work. Only thing is you will need to do the test run for extensive amount of time, and then see what kind of trades are being executed and do the optimization, further optimization, if you feel like. On my side, I think this is good enough, but of course, in tomorrow's session, we will see if something else needs to be added, or we should be shifting to a new setup. So let's stop the test run. No trade was executed for whatever time we were able to do the test run, maybe a couple of hours, 10 hours, and the equity and the other parameters almost remained unchanged. So that's it from my side for today's session. If you have any idea or any query to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. And tomorrow I will be back with the fresh beginning. We will see some further exploration using the various indicators and the tricks we can apply on those to build a efficient enough algorithm, so that even if we are sleeping or even if we are on a date, our trading should be continuing, and we should be making money to pay for our the bills. See you tomorrow. Goodbye.